The housing market, like most markets, is cyclical, and it can be driven by a variety of factors such as high interest rates, which is happening right now across Canada, political decisions, economic conditions, consumer confidence, and even immigration can lead to either a shortage or a surplus in the housing market. And a lot of people, realtors included, often talk off the cuff when it comes to market conditions, but there are specific statistics that you can use to determine which kind of market that you're in: a buyer's market, a seller's market, or a balanced market. And once again, my name is Ryan Gillard, a Real Broker. If you are thinking about making a move to the Calgary area, buying, selling, or relocating, I'd love to be your resource and help you out. You can give me a call, shoot me a text, send me an email. I'd love to help. All right, let's get right into it. And first up, let's talk about the actual market conditions. So I'll start off with the seller's market. So currently in Calgary, we are in a seller's market. And this might be changing in the near future, and I'll tell you why as we go through the video. And so this one's easy. This basically means there are more buyers in the market than there are sellers with their homes for sale. Just simple supply and demand. And you will see rising prices. You'll see a falling days on the market average. You will see a pretty strong sales to list price ratio, often over 100%. So sellers are getting their price or over that. You will see a strong sales to new listings ratio as well. And buyers are quite frantic. There's lineups to view homes, again, unconditional offers, and a bit of a crazy time being in a seller's market. But I do think this might be changing in Calgary in the near future. And next up is the balanced market. My favorite market to work in. It is the most stable. This is when the supply of homes equals the demand, so the buyer or the seller don't really have an upper hand. And just a very typical market. The average days in the market might be like a month or so. So you take a new listing, it might take a week to get an offer. And then most of the time there's conditions for like 10 business days. So about a month to sell a property, and most buyers want maybe 1 to 3 months to move into it. So just your very typical stable market is probably the best way to describe a balanced market. And next up, let's talk about the buyer's market, a pretty tough market to work in. This means that there is more inventory than there is demand for those homes. So a lot of sellers in the market, but fewer buyers. This might sound good if you're a buyer, but if we are in a buyer's market, there's generally a reason for it. And it's almost always a pretty tough economy. You'll see layoffs, you'll see a lot of firings and stuff like that. So a tough market, you will see falling prices. You'll see a huge inventory of homes on the market. The average days in the market goes way up. The buyers have more leverage. You'll see more offers that are contingent on the buyer selling their property, stuff like that. So just, again, simple supply and demand. And next up, I'll go over how I think it might transition from a seller's market into a balanced market here in Calgary. All right, so what is likely to happen with our market to transition us from a hardcore seller's market into a balanced market? Now, this is just my opinion, but I look at what's happening with the inventory. So when the market's red hot, there are all sorts of people, builders, investors, and the public who are looking to capitalize. And I'll start with the builders. Is if you look at Calgary in all four quadrants near the deep suburbs of the city, there's all sorts of brand new neighborhoods being developed right now. And eventually those properties will be hitting the market, and that could help balance things out. If you look at the inner city, there's all sorts of fourplexes going up, there's infill properties, and again, these projects take a while to complete, but when the market's red hot, we can take on that inventory and sell it right away, but eventually the demand will decrease a bit while these properties are coming on the market. And if we look at investors and renovators, same thing. Like those projects take some time to complete, but eventually they'll be ready and hitting the market. And the demand's not always going to be there. It's a very cyclical market. And as the demand cools and these properties hit the market, it will help balance things out. And there are also a lot of people out there who are calling me who bought homes at unrealistic rates and have to renew at much higher interest rates, and they're looking to cash out. So this is also helping to add inventory to the market. And you can see as I get into the market stats why I think this. It's a clear sign that we are maybe balancing out a little bit. And I'll touch on that as we go forward. All right, so let's talk about some of the stats that we can look at. And I'll start off with the very obvious one, and that is sales prices and maybe pricing adjustments. So if we just look at the monthly stats from July, it looks very strong. Our pricing is up year over year almost by 8%. But our pricing is similar to last month. It hasn't jumped up in just 1 month. That could just be a little blip on the radar. But what is noticeable is the inventory and the months of supply are up quite a bit. So the inventory is up 18.9% compared to last year. And the months of supply is up 1.75 to up 32% year over year. Again, the months of supply, I'll talk about this later on. This is the stat where if nobody could list a property for sale, it would take 1.75 months to sell the remaining inventory. This is definitely still a very strong seller's market at the moment, but still that's a giant increase, 32% year over year. If this keeps happening, I think that you will see more price adjustments and falling prices in the future. But as of right now, our stats are still pretty strong. It is the seller's market. I have noticed, just being in the business, I have noticed more price adjustments for properties that I've showed, and I've noticed it some of my listings as well. And when the market is red hot, you don't really have these conversations about pricing because everything is selling so quickly. But when it does balance out, you definitely have pricing conversations with sellers. I always tell them, if we come on the market and say 10 days goes by or 2 weeks, call it, if you're getting a lot of showings and no offers, you're probably 5% too high in price. If you make that adjustment, you almost always sell it. This has worked for me my entire career since 2012. If you come on the market and nothing is happening, like it's completely dead, you could be at least 10% too high in price. In that conversation, when the market's red hot, you never have it because everything is selling so quickly. But I have noticed this for myself and for properties that I've showed that there are some price adjustments happening. It's happening more commonly than it was maybe a year ago. And the next stat that I would look at is the days on the market and conditions in offers. So it's hard to track the conditions and offers, but when the market is red hot, you just see properties that are listed and you'll have a little clause in there, not a clause, like a little expression saying, say it's listed on a Thursday, that the seller will look at offers on the Sunday, have your offer in by 5 p.m., and the properties just go from active on the MLS to sold. You don't see as many conditional periods in the red hot market. You still do. You still find some transactions that have a financing condition and home inspection, condo documents and stuff like that. But a huge percentage of properties in the hot market just go active to sold immediately. Unconditional offers, and once the deposit is received, they're marked as sold. That's very common in the red hot markets. As the market balances out, you will see more transactions with the full range of conditions: financing, home inspection, condo documents, maybe the sale of the buyer's home clause. You'll see stuff like that. Again, it's hard to track this, but it does reflect in the days on the market. So right now, our market is still red hot. It is still a seller's market, and the days on the market hasn't changed too much from this past July to the previous year's July. It's only gone up from 23 days to 24 days, which is up 2.46%. So again, it takes a long time for things to play out in real estate. But as of right now, the days on the market in Calgary is still very, very tight. If we look at it sector by sector, so for detached homes, it's gone up from 22 days to 24 days. For condo apartments, 28 days to 27 days. It's actually dropped. And for the duplexes, days of the market's gone up by 2 days from 20 to 22. And for townhouses, it's stayed identical at 20 days on the market. So when we do get into a bit of a bad buyer's market, these numbers can be closer to 55 days to 65 days, as it was in periods from 2016 to 2020. So that's kind of the range in Calgary. Red hot would be 20 days, and kind of a bad buyer's market might be 55 to 65 days, is what I've seen in Calgary since 2012. And next up, let's talk about listing inventory. I've already touched on this a little bit, but I'll go into it in more detail. So as we transition from a red hot seller's market into a balanced market, you can expect to have more inventory on the market. And when the buyer has more choices, that should result in a higher days on the market, which we already talked about, and the prices should come down as well, depending on the inventory levels. So I'll just show you kind of what's happening right now compared to last year. So right now for detached homes, detached market, the inventory is up 12.85% to 1,950 units, and the months of supply is also up 22% over last year. So that's 1.45 months of supply to 1.78. For the condo sector, the inventory is up 22% to 1,368 units, and the months of supply is up 43%. So that's a huge increase. Even though 2.8 months of supply is still a hardcore seller's market, this number is a bit surprising, up 43%. For duplexes, the inventory is up 14%, and the months of supply is still very low, 1.47 months of supply, but it's up 21% over last year. And for townhouses, similar story, inventory is up quite a bit, 36% over last year to 546 units, and the months of supply up 51% to 1.29. Now, 1.29 months of supply is still a crazy seller's market. This is the hardest sector for buyers right now, but still, that's an alarming stat, 51% increase. So as you can see, that we are still in a seller's market. Anything under 2 months of supply is a very strong seller's market, but things can change quite a bit in Calgary. So I pulled this up. This is from like what year was this? 2018 of July, just to show you how it can change. And I'll show you the apartment sector. So if we look at the months of supply, where is it? Your months of supply, 7 months of supply. And there was a stat somewhere from 2016 to 2020 where I think it was closer to 1 year. So this can really change. So I would say that a red hot market in Calgary under 2 months of supply, balanced market might be 3-4-ish, and then anything over that would be a buyer's market. So right now, still a seller's market, but I'd keep an eye on the months of supply and the inventory levels going forward. And the next stat, which I think is very telling, is the sales to new listings ratio. Now, this might sound a bit odd at first, but I think it's a good metric to help understand the supply and demand dynamic. And so what this stat is, if you take the amount of sales in a month and divide it by the new listings taken in that month, you should get a number. And they say like a bad buyer's market is in the 40% range, and anything over 60% would be a seller's market. And so in Calgary, I'll show you what this looks like for us currently and how it compared to maybe previous years. So right now for the detached properties, the sales to new listings ratio is 63%, which would be in the seller's market territory. But this is down 11% over last year when it was 75%. So this is showing me that the detached market is cooling off a little bit. Still pretty good, still a seller's market, but it's definitely dropping a little bit. Apartments, or condo-style apartments, the sales to new listings ratio is 63%. That is down 20% over last year when it was 83%. For duplexes, it was 85% last year, and now it's 76%, down 8.74%. And for townhouses, the sales to listings ratio was 95% last year. That was crazy. That was the toughest sector, and the reason why is that the prices have gone up in Calgary, and the interest rates are forcing people into lower price ranges, which a lot of townhouses are in. But they still have like 3 bedrooms. Some of them have basements, so they're very desirable in this price range right now. But even then, it's still down 22% over last year to 73%. And I'll show you a previous year. So this was 2018, I believe. And I'll just go sector by sector. This was a bad year in Calgary. It was very sluggish. And the sales to new listings ratio, it was about 55% for detached homes. For condos, 46%. And attached properties, it was 47%. So you can see a buyer's market in Calgary in the 40% range. And then a red hot seller's market can be all the way up to 95%. And a balanced market somewhere in between. And you can see the trend is we're getting more listings and it's taking longer for those properties to sell. But our market is still good. But I think the trend is noticeable for me anyway, that things are, you're starting to see a few cracks in our market from what I can tell. And next up is the sales to list price ratio. So this is an important one as well. And what this stat means is what you list your home for and what you should expect as the sales price. This is what this stat covers. And right now it's very strong. So if we look at the detached sector, the sales to list price ratio is 100.12%. So this means on average, sellers are getting they're getting over they're getting over full list price by 0.12%. And this is actually down by 0.65% over last year. So it is decreasing a little bit. For condos, this number is 99.21%, down 0.09%. So fairly unchanged, I would say. For duplexes, sales to list price ratio is down by 1.03% to 100.48, still super strong. And for townhouses, this number is still at 101.11%, but it is down 1.36% over last year. So a market's still pretty good, but there are some signs where it's decreasing slightly. And I'll just show you what it looks like in a more realistic market. Maybe not realistic, more of like a buyer's or a balanced market. So in 2018, this number was sales to list price ratio for detached homes of 96.62%, for apartments 96.35%, and for attached homes 97%. And again, I've been licensed since 2012. It's always kind of been 97%, give or take a 0.5% or so, until the last couple of years where our market's really taken off. But you won't see this number dramatically lower than this in Calgary, usually just a few percentage points off of 100%. But this is another study you can look at to help determine what's happening in the markets. So again, right now it is still very strong, but it is decreasing gradually. And next up are a few things that I notice working as a realtor that you can't really track all that well, but you definitely notice while working in the business. And the first one I think is, I call it the new listing dilemma. So what this is when there's no inventory, buyers are on these auto searches and they're looking every day, and new listing hits the market, they drop what they're doing, we see the property, we make an offer, and the seller kind of blows you off. Oh, my wife is flying, or they delay a few days, and now all of a sudden there's a whole bunch of competing offers and it's sold unconditionally. And you repeat this process over and over again. This is a clear sign that you're in a red hot seller's market. When this stops happening, then you know things are balancing out. The next point, which is fairly obvious, is there's actually inventory to choose from. Again, a seller's market, there's less inventory and the buyer can't find what they're looking for. And again, you get into that dilemma where they see all the brand new listings and they keep losing out. But when things balance out, you can run a search and there might be 10 properties for the buyer to choose from. And you view them all at once and you make an offer, and it should be fairly easy. So if there are homes available for the buyer, it's an indication that things are balancing out. Another indication is when you run the search and you find some properties. If it's a seller's market, I'd say half or more are either conditionally sold or they're sold firm, but they're waiting for the deposit. But they still show up as active for the buyer. And you know when it's a really bad seller's market, you're constantly checking with the listing agent, hey, is this available? Is this available? When that stops happening, you know things are balancing out. And the next point is when you try to show a property in a seller's market, you're hopeful, you pull it up, you want to view the property, and the entire screen is blacked out with other agents and their buyers viewing the property. That's a telltale sign that you're in a seller's market. When things balance out, you have the whole day and it's fairly easy to show the property. A clear indication that things have returned to a more normal market. And next up, when the market balances out to either a balanced market or a buyer's market, you won't see the little expression in the private realtor comments that the offer deadline is, say, Sunday at 5 p.m. Have your offer in before 2 p.m. You see that little sentence all the time when the market's red hot, but when it returns to normal, you never see that, and the sellers will look at offers as they come in. And one thing that I notice quite often, in a red hot seller's market, you won't get calls from the listing agent after you viewed the property. They won't be bugging you, texting you, hey, did you like the property? Any questions? Are you writing an offer? They'll just leave you alone because they're expecting offers and homes are selling very quickly, a lot of them unconditionally. So it's kind of easy for them in a seller's market. But when the market returns to normal, they'll kind of bug you. After you've viewed a few properties, you'll get calls, texts, emails asking for any kind of feedback. What did you think? Are you guys making an offer? The seller is motivated. You'll get comments like that when the market returns to a more normal state. And so for me, that's like a telltale sign. In the last month or so, I've been getting more of this, where agents, they want to sell the property. They want to know what's going on. What do you think of the price? Was it overpriced? Did it smell okay? They're just curious what's happening, and they'll be bugging you for your feedback. And the last point here is you'll also see when the market returns to normal, I find there's more marketing materials in the property. And the reason for this, when the market is red hot, the homes can sell faster than it takes to make these fancy brochures and marketing materials. So a lot of listing agents won't bother, because they're very costly and they take a while to create sometimes. So they just forget about it. It's going to sell in the next day or so. Don't worry about those brochures. But when the market does return to normal, you will see a lot more of this in properties, like fancy brochures, neighborhood guides, little signs around the property, take your shoes off and stuff like that. But when it's red hot, you don't see that nearly as much. So I'm noticing all of those things, except for like the listing dilemma I mentioned. That's not happening nearly as much for me at the moment anyway. Most of the inventory stats are showing an increase in inventory coming to the market. It's easier to view properties. They're not all blacked off. They're not all conditionally sold. I'm finding things are a little bit more manageable in the Calgary market. Now, it's still a crazy seller's market here, but I do think maybe it is balancing out a little bit. So what does this mean for a buyer? It might become a bit easier for you in the near future, especially if they lower the rates and there's more inventory at the same time. It could be easier for you. But if they lower the rates, maybe there's more buyers that come to the market and they buy up all of the inventory and we're back in a seller's market. So it's impossible to predict. But I think looking at everything, in my mind, it looks like we're balancing out just a little bit. If you are a seller looking to cash out, I think now might be a good time. But again, impossible to predict. And that's just my take on it. Nobody's ever correct. It's like the stock market. But hopefully that helped. And if you are watching this, thinking about making a move to Calgary, buying, selling, or relocating, feel free to reach out, call, text, email, or comment. I'd love to help you out. Thanks for watching, and I'll see you in the next video.